Hi, VA loans for mortgages is one of the best benefits that our veterans have. And if you've served, we thank you for your service. But in Montgomery County, they can either give you an edge on your purchase or can quietly cost you the house. No money down sounds unbeatable. But sellers don't always look at it that way. And there are landmines to watch for, and some agents won't tell you about them. You already know that VA loans are government backed loans designed to help veterans. They're issued by private lenders and they're backed by the VA. And they're designed to give a better product to the borrower and to reduce risk for the lender. All this results in better terms all the way around. On paper, it's one of the best loan products in the industry. So, why is it a problem? Here are some of the big advantages. One, no down payment. This is huge. In Montgomery County and the surrounding areas, you may be looking at a house 600,000, 900,000, or even more. So this preserves your liquidity, and that's huge. You can buy a $750,000 home and keep your cash intact. Because of the VA backing, in many cases, you can make the purchase with 0% down, no down payment at all. On top of that, there's no private mortgage insurance. So even with less than 20% down payment, there is no PMI. In most cases, with most conventional products, even if you don't have a monthly PMI payment, it's built into the loan, so the interest rate's going to be a little bit higher in most cases. But with VA loans, even with no down payment, there is no private mortgage insurance. It's backed by the federal government via the Veterans Administration. Typically, rates are better. Because it's backed and because the VA guarantees these loans, there's less risk to the lender. So you get better rate. Taking it one step further, you also have more flexible terms. Credit thresholds and guidelines are more flexible for VA loans. And this is good for not only the first time buyer, but transitioning military folks as well. So the qualification standard is more flexible, and that's big for you as a borrower. And then another big thing is that there are limitations on closing costs. There are restrictions, there are limitations, so that there are some things that can't be charged a veteran using a VA loan that might go through and be totally acceptable otherwise. One of them is a cap on lender origination fees. And then after all of that, VA loans are about the only mortgage product available that is still assumable. Now, that doesn't mean you can just pick up the payments. If you find a house that's got an assumable mortgage, assumable VA mortgage, you can just pick up the payments and go on. There are restrictions, there are limitations, but it is assumable, and that can be very key in a situation where you're finding a house in times of higher interest rates. That means that you can take over the mortgage that's already in place and take advantage of what may be a lower interest rate, which in this time where rates are quite a bit higher than they used to be, can be huge. This can be a big thing when it comes to selling the house later on. So assumability is huge. Doesn't get taken advantage of as often as it could, but when it does, it's a big thing. So all these great things, what's the problem? Why do some sellers hesitate? Why do some buyers lose and miss out on the home of their dreams because they're using VA mortgages? Why do some real estate agents still have back off and hesitancy on advising the sale for someone who's using a VA loan? There are reasons. The biggest reason is more a matter of perception than reality. In the old days, VA loans were cumbersome, they were slow moving, the appraisals took forever, there were huge amounts of paperwork involved, and it became a problem. So if a person was buying a home using a VA loan, it was not looked upon very favorably by the seller. A lot of that has changed and it's no longer the case, but those perceptions are still in place, even with real estate agents I've run into who look the side eye when you bring them a VA loan in a competitive bid situation. Sellers worry because they feel that they're more complicated, they're slower, and they may be riskier. And a seller may pick another bidder based on the stigma, not the reality of it. So while this is unfair, it is something to watch out for and be aware of because it is happening. Now, one very real thing is that the VA appraisal system takes into account the property's condition. So if there are issues that collide with the guidelines, the underwriting guidelines of a VA loan, they'll get flagged by the appraiser and they will have to be taken care of prior to settlement. The VA appraisal is stricter and it is tied to property condition. And The property must meet the minimum property requirements as stipulated by the VA guidelines. The guidelines are often more strict than conventional loans, and they do take into account certain things like hand railings that may be missing, peeling damaged paint, especially lead-based paint, broken windows. Many of these things are minor in nature, but they will be things that the seller will have to take care of prior to settling on the home. And it could cost them some money. And after you've negotiated everything else and you're ready to go, the last thing the seller wants to do is have to renegotiate some repair or some handling that he wasn't counting on at the beginning of the deal. So sellers know this. They keep that in mind. And it is a very real thing. I've seen it happen a bunch of times in my career where halfway through the transaction, we had to get the seller to take care of something. And some of these things were quite costly and quite cumbersome. We managed to work it out, but not without some struggle in the process. Another aspect of VA loans is that you can't waive certain protections. They're built into the system and they cannot be waived. And in this competitive climate that we've been through, where people were waiving contingencies of various nature, with a VA loan, you're not allowed in most cases to do that. The VA amendatory clause stands and it rarely can be waived. And if it is, it could jeopardize the transaction. There are also limitations imposed by the financing contingency that becomes part of the contract when you're using a VA loan. The impact of this is that the offer may seem less competitive than a cash buyer or someone who is bringing conventional financing, even if your offer with a VA loan is in fact higher. It's become very common for people with financing contingencies to be waived if they're using conventional financing. With a VA loan, it's harder to do that and can put you at a disadvantage, unfortunately. Now, if you're looking for a condo and using VA financing, you have to be careful of this too, because the whole community, the whole association has to be approved. The entire condo project has to be approved by the VA in order for the financing to be available in that project. If it's not, you can't buy there no matter what using VA financing. And unfortunately, there are a lot of communities out there that are very desirable that you just can't get a VA loan for. That knocks them right out, and that knocks them right out of the running. And that aspect is huge in Montgomery County. And then there's the little matter of the VA funding fee. This is money. It ranges from 0.5% to over 3%, depending on your eligibility. Often it can be financed, but still money that has to be come up with. Sometimes it can be included in the financing and rolled into it. But in any event, it's money, it's real money, and it has to be included as far as the financing of the project or the house that you're buying. It's not a deal breaker, but it is real money and you do have to factor it in. Another factor that governs VA loans is they can only be used for a primary residence. You can't buy a second home, a vacation home, that sort of thing. So if you're trying to do that, you do have to find another means. And after all of that, since you may be buying the house with 0% down, that's less equity once you've settled on the property. Using conventional 3%, 5%, 15%, 20%, you do have some equity at the end of the closing session. But with a VA loan, you may have zero equity in the property, and it may take some time for you to recover that. So that's something else to watch out for. So, with all of that, how do you win in Montgomery County if you're using VA financing? Make your offer strong in all areas. Make sure you have your financing set up with a reputable lender that is known, and then you get full underwriting up front. That makes a big difference. Also, get your agent to work with the listing agent proactively. That's half the battle right there. Overcoming the objections the listing agent might have is very key to the survival of the project. The listing agent is going to advise his client and help him come to the decision of which offer to take. And if there are other offers involved and they aren't VA, and this listing agent has a prejudice against VA, you got to work to overcome that. So that's one thing, and it's a very important thing. Another very important factor here to achieve success when you're using a VA loan is target the right properties in the first place. Don't go after heavy fixer-uppers. Don't go after properties that look like they're in pretty rough shape in the first place. Often foreclosures and short sales aren't going to measure up. You're going to do better with VA financing if you go after well-maintained homes that have been occupied recently and are in pretty good shape. That doesn't mean there isn't an issue or two that's going to come up, but you improve your odds tremendously if you're going after houses that are in relatively good shape. Another thing to do is consider an appraisal gap measure built into your contract. It's not easy to do and it's tricky, the wording, but if you can buffer any appraisal deficiency there might be that can make you a little more attractive to the seller when you're using a VA product. And if you are going after a condo, check whether it's approved up front. Save yourself a whole lot of time, a whole lot of grief by knowing upfront whether that's even approvable for a VA loan. Before you even submit your offer, check it out. A VA loan is an excellent product. However, it's only as strong as the strategy behind it. And that's what you have to pay attention to. And that's how you win in this market. So it's a great fit if you have low cash reserves, if you're a first time buyer, and if you plan to keep the property a good long time. So don't buy something that you might have to move out of in a few years, because with zero down, you might be up against some limits at that point. Be careful though if you're in a bidding war, because this can make your bid less attractive. So use the other strategies we talked about to bolster it and work for you in that situation. Be careful also if you're looking for a fixer-upper. And if you're in a situation where you're looking for fixer-uppers, you're often going to be against cash buyers as well. So both those two can be big strikes against you. VA financing is one of the best wealth building tools you have at your disposal if it's available to you. But knowing how to use it is as important as having it in the first place. So get good advice, talk to your agent, talk to the title company, and find out how the best way is to proceed if you have VA financing at your fingertips. It's great if you can use it, and use it the best way you know how. Happy hunting and enjoy your new home.